CNBC-TV18, embarking on a quarter century of excellence.
Asian markets are definitely, however, seeing a little bit of caution. We did mention that there's Bank of Japan's final rate decision for 2023, which is awaited.
So far, investment of 1.03 lakh crores has already come in across these 14 schemes.
Support here comes in at 47,537, which is the corresponding 40-hour exponential moving average.
And improving earnings could generate sufficient free cash flow to reduce debt beyond FY24. All right, here's the first take on the index. Positive, up about 30-odd points.
I think some of the stock which has gone up quite substantially may not back up with the fundamental earnings.
Until there is clarity on that, the remaining critical closing condition, Sony is unlikely, to go ahead and give their permission for the deadline extension itself.
There will be 90-day lock-in period if it wants to sell further stake.
The RBI has approached this is a little bit testing the waters.
For the markets, it's definitely another day of consolidation.
Currently, SpiceJet has a market share of 6% as per the latest DGCA report.
The Panama Canal actually serves 9% of the container traffic.
For the markets, it has been range-bound.
Well, that was the day so far. You're with us here in a fresh new edition of Closing Bell. We are coming to you from the CNBC-TV18 News Online studios. I'm Prashant, with me, my colleagues Reema and Nigel. Guys, hi, good afternoon.
Hi, good afternoon. It's turning out to be a pretty good session, right? Quite the recovery from the lows.
Oh, absolutely. Once again, Nigel.
You need to participate on the upside, right? You have been making this move that this market wants to test higher levels. And today, if you bought the dip, you'll be very, very happy. The Nifty Bank actually is turned around close to around 350 points from the day's low. So let's see whether or not, last 4 trading sessions, we almost went to 21,500, but we couldn't get past that. Today, we're almost there. Let's see whether or not we can get over that.
Participate on the upside, but get in on the downside. That's the best risk reward. Basically, get in on the dips and not try to chase things higher, because there is a little bit of loss of momentum, whatever you want to call it, right? I mean, it's not like one way. The market over the last 2 weeks basically opened higher and then closed to the high point of the day, which is not the case. You are starting to get some dips which are being bought, and of course those are the best kinds. You typically you want the market to start flat to slightly lower and then move higher, which is absolutely a great thing. So 70 points for now on the Nifty. We are, I think, at the day's highest point, almost at 21,500. The level on the upside is about 21,750. That is the medium-term rising channel, the level that we've been putting out. It's picked up in a very, very nice way. In some ways, it's like yesterday. Yesterday, we got a sharp dip, then the market came up, but then it sold off again. So, we'll see the rest of the day to know more. I think the Nifty Bank has also come up nicely. Heavyweight stocks like Reliance are adding a fair bit to what's going on. So there is a participation all across. Maybe we can look at the Nifty Mid-Cap Index, which at least the last I checked, was actually not doing all that great. It is still not doing very well. Mid-cap index is down slightly, marginally, and the small-cap index is also absolutely flat. So it's a large-cap kind of a day with broader markets taking a bit of a backseat. Reema.
Well, yesterday the mid-caps outperformed, and today the large caps are outperforming the frontline indices. The Nifty is marching towards 2150 from the day's low. 21,500. That's what the Nifty is marching towards, just about 6 points away from that level now. It's recovered close to about 170 points from the day's low. The day's low today was 21,337. So from that level, it's a good 160-point recovery. The sensex has recovered 500 points from the day's low. The Nifty Banking Index is up a third of a percentage points. The PSU Banking Index has a gain of more than 1%. It's the FMCG stocks doing well, led by Nestle. That's the top Nifty gainer with a rally of 4%. Tata Consumer looking smart, 2.5% higher. Reliance Industries today is at a fresh 4-month high. And outside of the index, railway stocks are seeing buying. We spoke about IRCTC. Yesterday, up 12-13%. Today, opened in the red, but now is back in the green. So buying has emerged in IRCTC. BEML has a gain of close to about 6-7% there.
Well, that's right. And, in the last 30 minutes, the biggest gainer has been one of the biggest gainers this year, Coal India. That stock took a bit of a break for a few days. It consolidated a little bit. But the intraday chart comes up for you on the screen, and that one has currently moved to the high point of the day. Well, how do you trade the final 60 minutes? Keep in mind, we have the Nifty Financial Services Index as well that plays out expiry. Mitesh Thakkar is back with us. Mitesh, you need to play it on the upside. If you did it, you'll be happy if you bought the dip today. But what do you suggest from here on? Book out the profits or just trail your stop loss?
So, Nigel, to be honest, I think, there is some traction which is slightly developing on the negative side, in the sense that we've had a dip, we've kind of recovered, we are trading on the index, we've made a fresh high, though not on the bank nifty. But I think, the overbought situation isn't correcting because of this new high which has been made. So I'm slightly jittery. So what I would suggest is that, take at least 50% profits off and trail the stop loss slightly tighter than usual. So I'll suggest now a stop at 21,410 on this spot and see if this momentum can continue. Otherwise, I think, I believe that because of the extreme overbought readings, there is a good chance of some consolidation still happening on the indices. So we're waiting to see how it plays. But yeah, I think taking some profits off and trailing the stops to about 21,410 is something which I think could be a good option in the current scenario. On the stock side, I have a buy on Asian Paints, which has made a fresh swing high. So buy here with a stop at 33.20 for targets of 34.10. And the other one which I like is Man Infra. That's a stock, I think, which also has broken out of a 8-9 day kind of consolidation. So buy here with a stop at about levels of 203.5 and a target of around 220 can be looked at.
Okay, that's some individual ideas. The Nifty's hit a record high. The previous high was 21,492, hit on 15th of December. After that, markets paused, consolidated a bit, and today it's back again higher. And now, just I think any minute, it's going to hit that 21,500 level. There, it's hit it, 21,500 on the Nifty. That's another milestone conquered, and we're just, conquering milestones day after day. But one of the big contributors to that has been Reliance Industries. In fact, the stock is now sitting at a fresh 4-month high. It's not still at its life high, but it's a 4-month high on that. And brokerages see a lot of upside in the stock from here on, given their consumer business premiumization plan. Sonal joins in with the details. Sonal.
Well, both the brokerages are bullish on Reliance Industries. In fact, UBS has gone ahead and raised the target price on the stock to 3,000 versus 2,850 earlier. They say consumer businesses, they are in focus because leverage concerns are now overdone. Consumer business, in fact, could go ahead and contribute around 85% of incremental EBITDA coming in from FY23 to FY26. And this will take their share of EBITDA in the segmental performance from 49% in FY23 to 58% in FY26. And improving earnings could also generate sufficient free cash flow in order to reduce debt beyond FY24. New energy solutions, that opportunity is actually not priced in according to UBS. The SOTP here would be around 225 rupees a share. JP Morgan says that gap between Reliance Industries standalone and consolidated profit, it has been increasing a lot. And this is from 8,400 crore rupees in FY20 to 22,400 crore rupees in FY23. Telecom and retail profits, they have ramped up, leading to this increase in that gap that we are seeing. There are 350 standalone JV associate companies which are accounted for this difference between standalone and consolidated entities, and 133 of these entities, they have reported profit in the year gone by. They say stock has been range bound and there's pressure as well of earnings cut going forward, but these issues are overdone. From here on, we could see some surge in stock price, and they maintain an overweight rating on the stock as well.
Thank you very much for that. Dipan, this is one of the few stocks, right, waiting to break out. We're still not back to our all-time high levels. In fact, it's 10% away from its 52-week high level. Do you see that it's time now for Reliance to shine and, start outperforming?
Yeah, good afternoon, Rima, and thank you for having me on your show. Generally have been positive on Reliance, and we are seeing that the key change taking place this month is FII flows have turned positive, and global ETFs are getting funds in there to invest into global markets, and therefore I think Reliance is getting part of that liquidity flow. But the key question, of course, remains is the unlocking of the value in Reliance Retail and Jio and how that actually plays out. As shareholders, we can only hope that it is Reliance doesn't become an holding company, and then those discounts start to come into play. But if the company is split and free shares are given to shareholders, I think the stock price can easily go by 20% also from these levels.
Okay, no, I've got that. Deepan, good afternoon. Is the by the way, just a quick word on the market, brother, we can pull that up. You've got some 1,300 stocks higher and 1,150 stocks which are lower. So the market, even in the broader markets, I think is putting a little more distance between gainers and losers on the positive side so far. GE Shipping is one of those movers, 6.5% higher. We had the management with us, and we'll get to that story a little later, from now. But lots of new names, I would say, right? Hindustan Copper, for example, with a 5% pop, if you can have it up. There is DCM Shriram, which is up 11%. Indian Overseas Bank is up about 5%. Century Ply, I think there was an upgrade yesterday, 7% on that one. There's PC Jewelers, which is up about 13-14% or so. Kiri Industries is up 17-18%. Nureka is up about 12-13%. So it's not a completely new list, but it's a newer list as compared to what you usually see, which has done very, very well. Dipan, where do you find the strongest momentum in at this point in time? Things that you can rely on to give you gains from here?
See, I was just seeing the list that you put out. And if you see, all catch-up is taking place over here. So if you just run a screener, which are the underperforming stocks, and you buy those, then, I'm pretty certain that those also can start to move up. So I think what we are seeing over here is that the price earnings multiples are getting re-rated gradually. And companies where the P multiples are still at attractive valuations, investors are focusing over there and buying into those stocks because end of the day, there's only so much P multiple you can give to a PSU bank or a old economy type of a company where earnings always will never be, beyond that high teens kind of growth rates. So we are seeing gradually the participation in the market improving significantly. And the small mid-cap stocks which are in focus, investors have made a lot of, returns and money in small mid-cap stocks. And they're now trying to find the stocks which have not yet moved up. And always in any company, I can tell you can always make a story or justify a buying decision. And as we speak, I think if you look across the sectors in India, there's hardly anything negative.
There is another stock doing quite well, and that's Shankara Building Products. Now, this is a company which has announced a demerger. Now, Shankara Buildcon, it was called Buildcon earlier, Building Products, is two lines of business. One is manufacturing of steel, allied products, and many of the home building products. And the other one is a marketplace, which is basically distribution, trading, retail of those same products. Now, the company has decided to demerge these two. The reason being, the manufacturing business has lower margins and a lower return on capital employed. So margins in the manufacturing business would be 1.7, 2.1%. While on the other business, which is their trading business, distribution, retail, which they call as the building materials marketplace, has higher margins. It starts with 3%, goes up to 5.5%. Even the return ratios on manufacturing business is lower than that of the other business, the building materials marketplace. And therefore, the company is saying that lower profitability and higher capital employed in the manufacturing business has dragged the key performance of the overall business. And therefore, they're looking to demerge the two businesses to create two separate entities. One will be manufacturing, the other will be building materials marketplace, so that they can have a dedicated vertical for growth for the two entities, unlock significant value, and attract a new set of investors. Now, if you are a shareholder in Shankara Building Products, you will get one share in the demerged entity, which will be Shankara Build Pro, the one with higher margins, the higher return ratios, the building material place. And eventually, this new entity, which is being demerged, will also be listed on NSE and BSE. So there is value unlocking for the existing shareholders of Shankara Building Products, and the stock is higher in trade. Dipan, small company, but do you look at it?
Yeah, we have. And I think the prospects of the company have changed since APL Apollo have taken a stake in the company, and there's been no looking back since then. I'm not sure whether the demerger really makes sense or not, because the marketplace is still predominantly trading into steel pipes only, and they need to scale up the non-steel business to make it really a success. And manufacturing, I think the idea behind that would be to see if there is any synergy or any M&A action which is possible over there with APL Apollo or any other pipe manufacturer. So, but on the whole, it remains a trader of steel pipes, and to that extent, I don't find the business as exciting. But demergers and tie-ups with Apollo or any M&A action certainly galvanizes the stock price, which is what we are seeing on the screen just now.
All right, Dipan, any view on JTL Industries? That's a much smaller peer of APL Apollo. Valuation-wise, it trades at around 21, 22 times approximately, while APL Apollo trades around 35, 36 times. Though they have been talking about, increasing their capacity as well to around 2 million tons. Would you give it a look, or do you think you'd rather stick with the leader?
No, I think it's better to stick with the leader. And APL Apollo, I think, is the kind of premium products which are going into infrastructure, which are going into fancier buildings, and now even railway stations. I think that's where the real growth momentum and the higher margins are. And they're consistently focused on branding and finding new applications for their products. So even if the price earnings multiple is slightly higher, I'd like to be with the market leader because the kind of growth momentum which they can generate by entering into new areas and new applications, that is not something which everybody in the industry can do.
Yeah, in fact, we like to get the management, JTL management, because they are putting in big money, close to 800 crores of promoter and non-promoter entity. So we like to understand what is their plan, because the kind of money that they're putting in there. But as Dipan says, he'd rather stick with the leader, which is APL Apollo. Time for a break then. When we come back, we'll continue our chat with Dipan. Vinay Jaisingh as well of JM Financial will be joining in to give us his thoughts on the markets.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Global shipping seems to be in a spot of bother, with cargo liners now actively avoiding the Suez Canal due to attacks by Yemen-based Houthis who have fired an anti-ship missile at vessels. What could this mean for the global supply chain, and could it lead to a resurgence of inflation? Prashant has moved over to the big wall. Prashant.
Well, thanks for that. You know, we've seen the story during COVID times when container freight rates went through the roof, right? We're talking about hundreds of % of increase in global container freight rates. Could that situation repeat once again? That is the question. So the market is in a bit of a tight spot, and let me tell you why. Now, you know, global sort of volumes of containers from Asia to North America either goes via the Panama Canal or the Suez Canal. Over half of the global container volume passes through these two passages. Now, Panama, thanks in part to the El Nino, is suffering one of its worst droughts since 1950s. So water levels are low, throughput is limited. The Suez Canal, which was functioning well till now, that approach has now been attacked. Commercial ships which were passing through that have now been attacked by Yemen-based Houthis, rebels, leading to most large shipping liners refusing to take that route. The world's largest liner, NSE, has announced that it will now reroute all Europe-bound vessels via the Cape of Good Hope. This is until further notice. Other liners which have done this include Maersk, CMA, CGM, and others. I mean, actually, 4 out of the top 5 have done this. Now, the importance of Suez, right? It serves about 34% of the global container traffic. I mean, that's 1/3 of the global traffic. The Panama Canal, in comparison, only serves 9%. It's not just containers, though. If you look at the Suez, that accounts for about 8% of the tanker flow, which is oil, etc., and 5% of global dry bulk traffic, coal, iron ore, and other products. Meanwhile, Panama accounts for 5% of the tanker and 2% of total dry. So the importance of Suez, when you look at this as against Panama, is outsized. What's the problem, you might ask, if ships take a slightly different route, go via the Cape of Good Hope? Well, the problem is the distance increases. The voyage between, for example, Shanghai and New York is 17% longer and 37% longer via the Suez Canal and the Cape of Good Hope, respectively, as opposed to the Panama Canal. The same also applies to routes between Asia and Europe. I mean, a voyage between Shanghai and Rotterdam, which is the Netherlands, is 32% longer via the Cape of Good Hope versus if ships took the Suez Canal. And of course, the Suez is longer than the Panama. Basically, the diversion away from the Suez will extend the voyage duration and hence, in a way, remove a portion of effective ship capacity. You know, you need more ships basically to do the same trip, service the same routes. The fear is that this will hit global supply chains at a time when many believe global inventories have been depleted post the 1-year-long destocking that we've seen. Companies who regularly sort of come on our programs have told us that most have been expecting by December inventories to be flattened. Have shipping rates moved yet? The Shanghai Containerized Freight Index, that basically is an indicator of spot shipping rates, has seen 3 weeks of continuous gains. From the end of November, that index is up about 10% or so. It's not large. Back during COVID, we saw, of course, the rise was much steeper. The issue remains a potential threat, of course, to earnings of exporters, but not just exporters, importers as well. And of course, I mean, it is generally inflationary because it increases inefficiency, it increases costs. And of course, I mean, for stuff like grains, oil, I mean, this could have a pretty overall kind of an impact unless and until, I mean, the issue actually gets resolved pretty quickly. Back to you.
Okay, all right. Thanks a lot for that, Prashant. Deepan, what do you make of this news? GE Shipping could be the one in focus, right? Because they'll benefit on the back of higher demand for ships. They'll benefit on rates as well. And in addition to that, their offshore, that's the rig segment, should do well because that'll get repriced upwards in the years to come.
Yeah, but I think first of all, very good analysis. I did not know all these calculations and how they play out. But yes, I think, and this is very badly timed as well because you're just getting out of high inflationary situation, and any supply chain bottlenecks again will bring that big bear inflation into the play over here. So let's hope this gets resolved. There have been many such instances in the past. The Suez Canal has got closed, but then there's always global pressure to get it open up and running again. So let's hope it's only for a few weeks, maximum 1 or 2 months or so, and the shipping routes do get normalized. But Great Eastern Shipping by itself also, has been doing pretty well. It's a very well-managed shipping company. And, with the buoyancy taking place in the EXIM trade from India, I think this company certainly will benefit pretty well. Return ratios are also high, dividend yields are high, and valuation-wise quite comfortable. It's just been kind of an ignored stock, which is now coming more and more back into the investors' minds.
What about Devyani International? What have you made of their plans to go to Thailand? They've gone shopping there. Valuations appear to be reasonable, but some part of the street believes maybe they would have done better focusing on growing the Indian market. Your thoughts on this acquisition?
Yeah, I go with the latter. I mean, as shareholders of Devyani, although the stock price is up today, but I don't think this is part of their core competency. Going and buying restaurants in Thailand and trying to understand that marketplace and going over there is certainly going to take away top management focus and time, especially when the Indian market itself is offering so many opportunities. At the same time, so many new players also are coming into India. So we would expect Devyani to launch maybe more brands or many more such franchise types and get new players into the QSR into India rather than going out and buying a Thai chain. In any case, Thailand is a pretty mature market from that point of view, and I'm not sure that they'll get the best return on investment over there. Of course, the only comforting factor is that Temasek is a minority shareholder in that particular JV. So that offers a little bit of hope that maybe 2-3 years down the line, they could perhaps exit from it at a fat profit as well. But it's from an investor's perspective, I know the stock price is doing well, but from a longer term perspective, as a shareholder, I'm not very pleased with the move.
Okay, got it. All right, Deepan, wishing you a good evening, and thanks so much for joining in and giving us some analysis on all of those stocks. Well, let's welcome Vinay Jaisingh from JM Financial Services onto the show. Hi, Vinay. Hope you're feeling good. It's been a great year. Some of the stocks that you've spoken about have done quite well. So it's been a good 2023 for you as well. But tell us, in the last month or so, say the last couple of months, what has been the fresh addition to the portfolio, or any position that you'll had which you'll have added on further?
Sure. Thank you so much, for calling us for the show time and again. And, it's been an absolute pleasure, relating with you all. The conviction levels are always tested with, quality questions from your team. So please keep it up. I think stocks which we've been adding, fresh stocks which we've been adding or existing positions have been companies in the consumption space like Fusion and Varun. Fusion Microfinance, Varun Beverages. CapEx cycle is something we are super excited about, and we've been saying this time and again. This seems to be an era, the last 10 years, the Indian government has increased the CapEx by about 5.5 times. Corporate is going to catch up. We hope 2024 is the year for corporate. We like companies, in the water treatment part. We like companies in the, even in the engines parts of companies like Viatech, Wabag. Companies like Coil, we've been buying them. They were at 8 times multiples. Now they're between 12 and 14 times multiples, respectively. In the large cap space, with the market getting a lot more relatively expensive, we've also increased our flight to quality in companies like telecom, where as we use more and more of the net, as we use more and more of the data, we're using ARPUs, we're increasing ARPUs for them. So that's where we like companies like Bharti. In the defense field, at one time, we bought a lot of Hindustan Aeronautics. Bharat Electronics is something, which on a catch-up impact, we are looking at as well currently. Specialty chemicals, that's something we went very wrong on till 2 to 3 months ago. My analyst Sudarshan has been smiling last couple of weeks. We've got Colin Arkin quite right. Blue Jets also looking a lot more healthier today than ever before. ER&D is something, phase 1 we got right. Now we're looking at companies like Cyient and Axis Cater. And in autos, we still believe in our healthy Tata Motors story. So a lot in the basket. They're all active risks we are taking, largely based on where we see the earnings trajectory being a lot more rock solid, so that even if, I think the world next year will slow down a lot more than it did last year. You spoke about inflation pain in the last discussion. That was something which went, the world's way in 2023. We're hoping that doesn't create a problem. But courtesy the slowdown in the world, we think India is outshining, and we got to look a lot more at domestic angles, which is why every stock I mentioned to you has a lot more domestic play or make in India play than, a global play.
When I talk to us a little bit more about Varun Beverages, the stock has done well. I think this year itself, it's seen a rally of close to about 77%. Its market capitalization now is in the top 50 in India and much higher than its peers like a Tata Consumer or a Godrej Consumer, Britannia, Dabur. Where from here now for Varun Beverages? It's almost at 1,200 rupees.
Sure. When we started the year, we thought Varun Beverages earnings, this is your analyst Anirudh telling us the earnings should grow at about 15 to 20% on the top line and 15 to 20% on the bottom line because the company is moving up the water chain and the company is also increasing its market share in the cola part of it. Now, if you look at the results for the 9 months, have come out. Varun is a calendar year ending company. You've seen the top line grow north of 20%. You've seen the EBITDA grow north of 30%, and you've seen the bottom grow north of 40%. You don't get such companies of this size in the consumer space, which are kind of stalwarts, which grow between the 10 to 15% CAGR. Here you're talking about a company growing still, let's say 40 is an outlier, but at least growing north of 20 to 25% on the bottom line. So we think as the earnings grow, even if the PE is maintained, we're looking at a rock solid 20 to 25% earnings growth in the next 2 to 3 years for the company. It's getting into from being a beverage company to, looking at foods as well. That could give it a lot more fillip in terms of earnings growth. It's one of the most backward integrated companies. So all that gives us a feel good in a market like this. And guess what? You're in festive time. Christmas is around the corner. And this company's utilization rate should relatively be a little more than what it was last year. Clearly, April, May, June are the best months for the company because that's when the heat gets on and this company's volume growth gets better. So I really like this company, both in terms of earnings growth and how the management is strategically looking at from going to drinks into newer, smoothies, newer drinks, which they are launching, and more importantly, a probable venture into foods also would help them substantially.
Vinay, hi, afternoon. Just two names. One is Fusion, which you mentioned, and we've discussed in the past as well. We had the management with us, I think, a couple of weeks back, and that stake sale had happened. But there's a lot more to be sold, which perhaps will happen gradually over next year and the year after. So that will remain. Does that not? Is there a factor at all, or you think? I mean, it's all going to get absorbed easily. Second, if you can talk about chemicals and the names that you own, is this just a tactical kind of up move we're seeing, or are things turning for the chemical space and for good measure? What's your sense?
So firstly on Fusion, clearly the rains which came in northern India, and Fusion gets a lot more of its revenues in the north part of India than the rest of the country, has led to a relatively slower loan book growth. Our analyst Pooja expected the earnings growth or revenue growth to be as much as 30% earlier on the loan book front, but it was 20 to 25%. And the faith was that now it would be at least for a quarter or two at 20 to 25 before it moved up. What surprised her and us was, with the growth of 20 to 25, the company didn't need to focus as much on its capital adequacy ratio. But the company's capital adequacy ratios are rock solid 25% today, even more than what its loan book could be in the first quarter. So yes, a company which is focused on quality, which is giving you right disclosure levels, warning you if they see a short-term pain, will trade at far higher than 1.5 to 2 times book, which the company is trading at currently. Its ROA is a rock solid 5%. My bet is as the liquidity increases, floating stock increases, the formula of getting into indices in the mid cap or large cap is just about increasing your floating stock. So that story would play well for the company in the months to come. So yes, the more the liquidity for the management, the more it is for investors to look at, as long as the company focuses on doing the right thing, which is high quality loan book growth at the cost of lower NPAs. And if there is a slippage, whatever be the reason, come and tell the world, the market would love it a lot more. So that's really where Fusion fits in. On the chemical side, sorry.
Yeah, go ahead, please.
My apologies. On the chemical side, quick 30 seconds out here. You're seeing China still be a question mark in terms of, what's going to happen next in terms of the growth. But what you're clearly seeing is, courtesy the geopolitical risk increasing, some of the chemical name prices, inching up, and that's where you get the bromine prices moving up, and that's why we like Arkin, a net cash company. trading at 12 to 13 times F25, 26 numbers. You're seeing the commodity price move up, capex behind you. So that's kind of tick the box for us. There's a little bit of pledging of shares which happened for the company, which we are not too happy about. But apart from that, we clearly like the company's strategic initiation to move from bromine to bromine derivatives. Tatva Chintan, again, same story. You're seeing, little bit of CV growth come up in China, and that's going to help them. They are moving into electrolysis, and flame retardants doing pretty well for them. And as you see the commodity price move up tactically, these are the bets which are relatively cheaper than what they were in the past, and which will make us some alpha in the future. Sorry,
right. Okay, no, we'll leave it there. Vinay, thanks for the explanation. As always, detailed and to the point. Thank you for your time. And it's a great conversation as always. Thanks very much, Vinay, for being here on CNBC TV18. Well, that's, the view coming in from JM Financial. 35 points on the Nifty, 21,454. So as I was saying, there is a little bit of back and forth which has happened. The momentum is not, as rock solid as it was over the last fortnight or so. There are these pullbacks also which are emerging. We'll take a quick commercial break here. We'll come back and we'll get you a quick check on what's happening in dealing rooms. D Street Chatter with Nimesh comes up, and we'll get you trading ideas after that. Stay with us.
CNBC TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, the market's still holding well in the green. Let's get in Nimesh to give us an insight into D-Stream chatter and what he's speaking about there. Nimesh.
Hi, Nigel. You know, there was a strong intraday recovery, but some of it got sold into. I guess that's largely because there is a market at close sell basket, especially the Nifty names that are leading a FI desk. Remember, you know, the mid-cap index is broadly under pressure today, and that's because, if you remember, even yesterday there was a feedback that there was a large basket selling in the mid-cap names from a leading FI. So it looks like for the last few days, the FIs have turned net sellers in the Indian market. Not that it matters more because of late we've been just rallying on the domestic liquidity. The sector rotation continues. So for a change, the consumption stocks are buzzing in trade today, and on the other hand, some bit of profit booking is visible in the metal names, which rallied pretty hard of late, and some bit of profit booking in the select PSU bank stocks as well. But I guess it's the liquidity which is driving this market, the domestic liquidity which is driving the markets up. But from an FI perspective, for the second day running, there is basket selling, is what I understand from larger institutions.
All right, Nimesh, in terms of individual names, what is on your list today?
Prashant, so in terms of individual stocks, the first name is Adani Energy Solutions. It stands out because, you know, after a long time, some bit of institutional interest seems to be back. So the indication is that there are strong, bid buying from larger FIs. So expect high delivery volumes in that particular stock, in that particular name today. But looks like first signs of institutional interest is back in the Adani Group stocks. The second name is Ajmera Realty. Been pretty much quiet, marginally under pressure as well. We saw a bit of a uptick in the afternoon trade after a large block. So 2% equity got changed hands. I understand the promoter entity was selling in today's block. So disclosures could be important there. The third stock is Swan Energy. This keeps coming up in my charter list quite often of late. There have been periodic blocks as well. Again, I understand there's going to be a large block deal in Swan very soon. And also the next big trigger to watch will be the R-Nibble listing, which will happen very soon. So that's something to keep a track of as far as Swan Energy is concerned. And the last name is Oil India. You just cannot ignore the PSU names in this rally, right? Oil India for a change today has seen a big move and good volumes as well. So it looks like some bit of institutional interest is back in Oil India as well. And remember, the stock has actually broken today from its 13-year high. So technically, there is a breakout as well and some bit of fund buying as well in Oil India today.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's hop across to Mitesh. He's joining back to give us his call at around 3:10 today. Mitesh?
Nigel, I have an STBT on Maruti. I think we had a sell call earlier. It's been a stock which is underperformed and is looking slightly weak on the technical charts. So STBT on Maruti with a stop at about 10,300 and a target of 10,050 can be looked at. And BTST on... Sorry, I forgot the name of the stock, but I had a BTST on Devani International. That's BTST with a stop at about 190 for targets of 186.
Mitesh, we'll come back to you for more, but for now we'll leave it there. Thank you very much for that. Now, cricket fever continues as the auction for the 2024 IPL, the Indian Premier League, is underway. I mean, the big news ahead of the auction was the appointment of Hardik Pandya as the captain of Mumbai Indian squad. Over 300 players, remember, will go under the hammer this year. The event in Dubai features a star-studded list, including Mitchell Starc, Pat Cummins, Travis Head, Rachin Ravindra, and many more. Our sports editor for the group, K. Srinivas Rao, is now joining in to talk about this. Srinivas, great to have you with us here as always. We look forward to your analysis on the game of cricket and more. But I got this message. I want to read this to you. And, Pat Cummins is the subject of a fair bit of debate. And the message I got is this. It says Pat Cummins is going to earn approximately 1 crore per IPL game that he plays. That's 25 lakhs per over, 4 lakh rupees per delivery, and about 20,000 rupees for every step he takes. I don't know if you've done the numbers, Srinivas, but take it away.
Phenomenal. 20 crore, phenomenal. You know what? The first thing that occurred to me is I don't know whether Australia rewarded Pat Cummins enough for winning the World Cup for them. I don't know about that, but India has definitely rewarded a very well-deserving World Cup winning captain. Quite a trophy win there for, the Sunrisers Hyderabad. Not just because they get to have a captain on board, but look at this year. Everything that Pat Cummins has touched has actually turned into gold, whether it's the WTC final, coming back to win this 50-over World Cup from literally nowhere and, look at Pat's journey over the last, whatever, like, couple of years, ever since Justin Langer exited the Australian dressing room as coach, and, all sorts of controversies around the man. He's literally fought all of it to emerge winner on every given front. I mean, if anybody deserves a day under the sun, it is Pat Cummins. So I think, and a very good buy for Sunrisers Hyderabad also, considering this is a captain they would like to want.
I'll give you another number, Prashant. I think you spoke about 1 crore per match, right? If he played two ODIs, 2 T20s and 2 test matches for Australia, all of that together, that's 6 matches, then he would get this equivalent amount that what he's going to get for one match here in the IPL. That's 1 crore altogether. Srinivas, weigh in on that one, and how do you see things shape up as well? What are the other interesting ones that came out?
Well, some really interesting ones. For example, I think Travis Head and Daryl Mitchell, 2 really kind of, compelling names, and I thought they went for a very good price, and expectedly so. Whereas some bits I was surprised, like Delhi Capitals buying Harry Brooks, although they got him cheap, at 4 crores, Harry Brooks is a very good buy, but I don't know how is Delhi exactly going to benefit from Harry Brooks there. And the other bit was, well, the most surprising one, Robin Powell for 7.4 crore. Again, I mean, other than the fact that he happens to play in Rajasthan Royals Caribbean Premier League franchise, and that's why he kind of manages to build a connect. Other than that, I really don't know what exactly was the purpose there. The one thing that comes to my mind immediately as far as this mini auction is concerned is whatever the buys these teams are making is only for these couple of months, because once this next IPL, which is IPL 2024, once that's going to be over, literally all these buys are going to be rendered unnecessary, because retentions will happen. Most of these players will have to let go. So again, you look at it from a Sunrisers Hyderabad perspective, they will want to hold back Pat Cummins. So that's why it's a very good buy. Look at it from a CSK point of view, Travis Head, a long-term cricketer, they would like to look at it from a Mumbai Indians point of view. 5 crore for Gerald Coetzee. I think that's a wonderful buy. So I think there are some of the buys that are long-term, but again, I don't know what is retention going to these buys. So it's only temporary for now.
Srinivas, when we talk about markets, we talk about, value investing. Who is the best value investor? Which team right now, so far? Who's being the most value conscious?
That's exactly where, it's a great question. Thank you for asking this, actually. It's a problem that IPL has not addressed properly yet. You talk about value building. Value building happens not at the top, it happens at the bottom, especially from a cricketing standpoint. If you'll see, value building is always futuristic building, and when you look at things from a futuristic perspective, you look at building grassroots, and I don't think IPL is providing an opportunity to do that. I'll give you an example of Mumbai Indians. A lot has been made, a lot of noise was made about Hardik Pandya coming back from Gujarat Titans to Mumbai Indians. Well, they saw value, they decided to spend money, they didn't mind going to the auction at half the purse that they could have potentially, and in doing so, Mumbai Indians has set a trend, which, mark my words, in the coming years, IPL, most other franchises will begin to follow. But since you're talking about value addition, I'll say this here, look at MI identifying a Tilak Verma from a future perspective, a Vadera, or any youngster, what happens when the retention comes over next year? They have to let go of all these young names, Devol Brevis. MI decided at one time, there was a young South African batter, they wanted to invest. Next year, they have to let him go. So, unfortunately, today, even if franchisees have identified young names, talented young names, they don't want to put their cards on the table. They know that next year they will not be able to retain almost 80% of these names. So everybody is waiting for the mega auction. So there's no real value building happening here. And for value building to happen, the IPL really needs to take a very conscious call that the idea of an IPL auction, a player auction, is well past its sell-by date. It doesn't really have the charm. Value building will happen only when you encourage franchisees to build grassroots properties. That's not happening in IPL.
Okay, thank you very much for joining in with your insights. Keep them coming. For now, we need to get our viewers an exclusive from Money Control on Tata Consumer, which has emerged as a front runner to acquire a majority stake in a company. Ashwin is joining in for more on that. Ashwin Mohan. Okay, we'll get to that in just a bit. For now, we'll slip into a break. We'll come back to that story on Tata Consumer.
CNBC TV18, embarking on a quarter century of excellence. CNBC TV18, embarking on a quarter century of excellence.
Welcome back. As promised, let's get you the exclusive from Money Control, and this is on Tata Consumer, which is on the prowl for acquisitions. Ashwin Mohan joins in with the details. Ashwin.
That's right. This is a story that broke earlier today on Money Control. Tata top boss N. Chandrasekaran had set the ball rolling for Tata Consumer Products earlier this year during their AGM, when he made one thing very clear. They would expand into new categories. they would look to expand the food business, and they would do this via the inorganic or acquisition route. Now, Tatas have been flirting with the idea of acquiring Bisleri. They've also been trying to woo Capital Foods. But one asset, which we are given to understand from our sources, that they are in advanced levels of acquiring a majority stake in, is Organic India. Now, Organic India, of course, is the popular herbal and wealth and wellness products player. Organic India is backed by Fab India. Fab India holds around 64% stake in Organic India, and 15% stake is held by private equity player Premji Invest. Now, what our sources are telling us is that Tata Consumer Products is currently at advanced level negotiations to acquire a controlling or a majority stake in Organic India. The synergies are very clear. Tatas want to focus on the health and the wellness segment. This category offers those kind of products, especially in the teas range. Tatas are big on tea. That's a big chunk of their overall revenues. And of course, with a conglomerate like Tatas, which has that kind of distribution muscle, they can scale up the entire business of Organic India. Organic India, on the other hand, of course, is non-core to Fab India, and Fab India is looking to, in fact, unlock value. When we reached out to both the parties, Fab India did confirm that they are in talks with several potential investors, but they told Money Control that there's nothing concrete as of yet. Tata Consumer declined to comment on market speculation, but keep an eye out on this one. As far as the food segment is concerned, you will see Tata Consumer going and trying to expand via the inorganic route in the days to come, and this one seems to be in the final leg if our sources are to be believed. Back to you.
All right. Thanks very much, Ashwin, for that. So it's an important story we will track and continue to follow. Jay Bala from cashthechaos.com is joining us. Jay, good to have you with us here. Coming to you a little late today. That IPL auction taking up some time. As Pat Cummins shows, there is more than one way to earn money. You can win the World Cup. Well, jokes apart, how's the market looking, Jay? We are looking at new highs, and I mean the thrust is clearly on the upside. How much more?
Yeah, see, if you recall, when the market clocked in 457 on the 16th of November, I said the markets are due for all-time highs. But my objective was closer to 21,100. The markets have exceeded that, and the momentum is pushing higher. So if this same momentum continues, I think the target could be somewhere close to 22,500 for the Nifty. But there is caution signs coming from other sectors. So there is a little bit of a crossfire in the markets, I should say. While Nifty, if it can continue with the same momentum, I think the objective is 22,500, provided the Nifty Bank, which I've been pointing out, is vulnerable, and Nifty Auto, as of today, is also slowing down a bit. So as long as these two can keep up, I think we can maintain objective of 22,500.
So if banks is looking cautious, auto is primed for a bit of a reversal, what can take the markets higher? Which are the sectors, stocks looking the strongest? Any trades that you would recommend?
It's the space and auto itself is still strong. I think, but the sector that hasn't lost momentum is reality, FMCG. So there might be takers from there, and Reliance, of course, is starting to push up. So these three may be the contributors: FMCG, Reliance, and reality. So that the push could come from there, and even IT is coming into resistance. So keep your focus on the three sectors I have mentioned here.
What about oil, Jay? Does it look like it's going to pop up here again?
Yeah, that's right. But it looks like it's just going to be a short-term pop-up, Nigel. And I think it's unlikely to, Brent is unlikely to cross 84. So, 84.75 to be precise. So as long as it stays below 84.75, the major trend remains down. And I would expect a push somewhere close to 83 and then turn down and make lower lows in Brent.
You've got two stock recommendations, going long on Orient Electric and short Hero Motor. Take us through the trades.
That's right. See, Orient Electric, is a relatively new listing, and it seems to be having a sort of 2-year cycle, too short a history to conclude conclusively. But from whatever data that's available, from 420, it's exactly half to 210. And from there, it's just reversed today. And this looks like, from a short-term setup, at least a bump up to about 290. So stop under 210 makes sense. And as I said, the auto sector is slowing down. So you might want to, probe a short, not exactly plunge it too much deep in. Take the shallow end, take small position sizing. Or if you're already long, we had a long on Hero Motors a few weeks ago for all-time highs. At least book those, book the profits in that, and keep a stop of about 39.49 for Hero, and look for a short-term drop to about 35.20.
Out of time. Jay, thank you very much for joining in. And with those trades counting down to the close is going to be around 21,450 in the green for the Nifty and the Sensex. But gains are fairly lackluster, just up close to about 0.1, 0.2%. But this is the day when the Nifty hit that 21,500 mark for the first time ever. Late profit booking resulted in the Nifty shaving off close to about 50 points from the top. Heavies like TCS, HDFC Bank close in the red. We saw sectoral rotation in FMCG and Reliance Industries with the stars in trade. Nestle closing up 4.5%. Reliance Industries 4-month high, a 1.4% gain, and Coal India had a late surge.
Well, that's right, Rima. In terms of other stocks that did very, very well in today's trading session, Cafe Coffee Day, suddenly that stock popped up and trade, one of the big movers. Edelweiss was up close to around 12%. PC Jewellers was the other one that was up more than 15% in trade today. Hindustan Copper moved higher as well in trade. IOB, I think the float is very limited out there, but that was one of the top volume movers. IRDA, after a couple of days of break, that one moved up yet again. JTL, big money coming in from the promoter entity. The stock, though, couldn't sustain at higher levels, so it goes home with a gain of close to around 3% odd, though they're putting in money at much higher levels. So those are all the stocks that were moving around from the broader markets. A few more names just to highlight, some of the losers as well. SAIL came in for some profit taking. LTTS was lower, and Siemens as well did end lower. Some of these stocks did very, very well in the last few days, but today they didn't come in for some profit taking.
Okay, a little bit of up and down and not up and up. That's been the story for the last 2 days now, and I think today also that largely holds true. So 21,440 is where the Nifty finally ends there. And tomorrow morning when we come, I think we'll start by saying that even today, at least on close on the Nifty, the index did not break hourly averages, and neither did the Nifty Bank. On close, intraday, yes, it did, but not at close, which means the price is not telling you, even though things like RSI, etc., have been above 80 for a while, which means that in a classical sense, things are overbought. Price is not giving you a signal that there is any large dip or anything which is immediately coming our way. Well, it's a wrap on this edition of Closing Bell. Markets forward. We'll pick up on all of the action forward. Stay with us.
CNBC-TV18, embarking on a quarter century of excellence.